After a 6% appreciation, what is the way forward for Indian markets in the short term, in the medium term, and in the long term? Let's discuss that with Ajay Botke. He represents Prabhudas Liladher Securities. Ajay, good morning. Thank you for joining us. Ajay, last 2 weeks have been really volatile for Indian markets. First, we saw a climatic fall, then we saw a sharp recovery. Do you think now things could be range bound?
I think we did see a very sharp rally. I think essentially there were fears of American strike in Syria leading to the crude markets being on the boil. But I think the fears have receded to a large extent and a diplomatic solution looks likely to be in sight. And hence I think the concerns on the crude oil front, singeing sort of the under recoveries further has receded for the time being. Also, I think the trade deficit numbers for the last month have really surprised the market positively. Although I would like to state that if you look at the drop in massive plunge in gold imports from roughly 7.5 to 8 billion in the first 2 months each to just 0.65 billion, it does appear that the essential drop from 18 billion to around 11 billion in the trade deficit directly corresponds to the throttling of gold imports that one has seen, in addition to the fact that the wedding season typically post-monsoon gets over and it begins only post-Navratri. So one will have to see sustainable gold imports, what number sort of on a monthly basis they stabilize at only after the wedding season recommences sometime post-Navratri. Now having said that, my opinion is that the markets clearly are bracing for a likely fiscal wobble, and I've been saying this now since the beginning of September, that what really should worry us now, that's what I've said in my strategy report, is not the current account deficit, because that seems to be stabilizing, but it is the fiscal deficit that we should really be worried about, because in the first 4 months already we have crossed 3.4 lakh crores, which is 63% of the full year's target. And the net tax receipts that are expected to grow, budgeted to grow by 19.1%, have grown by only 1.4% in the first 4 months. So there are multiple pressure points that we need to be cognizant of and need to take steps to ensure that those sort of are taken, the measures are sort of put in place to ensure that there are no shortfalls. The divestment is one part. We have only seen 1.3 thousand crores of divestments in 6 companies till now, and we have budgeted around 40,000 crores for the full year. Last year again there was a shortfall. Vis-a-vis 300 billion, we did only 240 billion. Telecom receipts vis-a-vis 580 billion, we did only 190 billion. And this year we have budgeted around 40,000. Although there are again hopes that with the TRA as sensible suggestions by slashing the spectrum, the spectrum auction prices, hopefully I think the auctions that are expected to be held in a month or two now will be a success, unlike the ones that flopped in November 12 and in March 13.
Right.
So these are 3 pressure points on the revenue front, Nikunj, that we need to be very careful about.
Fair point. Fair point. Growth is contracting, earnings have not picked up, so the fiscal picture really for FY14 could be shaky. Ajay, let's talk about the big deal, and the big deal is that finally JP Associates has decided to sell their Gujarat-based cement capacity to Ultratech. There are three parties involved here: JP Associates, Ultratech, and banks or the lenders. Who will gain the most out of this deal?
I think Ultratech has got a good deal in our view, in terms of the limestone reserves that it has got, in terms of the total land that it's got. I think clearly the expectation is that although the plant is currently of 4.8 million tons, the limestones as well as the land that they have got has enough potential over time for them to double the capacity if the demand sort of pans out in the medium term. Also, I think this will help in consolidation of the players in that region, and also help pricing power in the medium term when the demand picks up. So I think Ultratech would clearly be a gainer. At the same time, JP Associates, which is highly leveraged and was looking sort of for a long time to sell off some of the assets to deleverage, also will be a gainer. And there also have been reports in the media that they're looking at a possible disinvestment of some of their hydro plants. So I think one will have to wait and see how the deleveraging effort of the JP Group also proceeds. But all in all, I think it's a very welcome deal. both from the buyer and from the seller's perspective.
Ajay, it's been a quarter of return divergence. One end of the spectrum, you got IT and pharma, and on the other end of the spectrum, you got PSU, banks and industrials. Do you think for one more quarter, this return divergence will continue?
I think the outcome will clearly depend on how the currency behaves. I think one has seen lately in the last week the currency clawing back from 68 to 63. And sort of, it will also depend on the stance that the RBI adopts in the monetary policy on 20th. But in my opinion, I think the RBI will have to persist with a tight monetary policy simply to break the vicious cycle of falling currency leading to higher inflation, leading further to a falling currency. So to break this vicious cycle, they'll have to adopt an extremely tight monetary policy, and it has to be supplemented, in my opinion, by a tight fiscal policy. So growth, in my opinion, for a year or two, one will have to be content with to live with growth at a lower trajectory, and that dynamics, I think, will play out in the markets, and that's why I think the approach that I will have on having a medium-term portfolio is not to build in too much of alpha in the portfolio, and try sort of to have steady names with sort of some of the large cap IT companies like Infosys and Wipro, pharmaceutical companies like Ranbaxy and Dr. Reddy's being prominently there in the portfolio. At the same time, the industrials, because of the valiant efforts of the CCI to clear a very large number of projects. I think we saw 1.6 lakh crores worth of projects cleared till July end, a further 87 projects of 1.8 lakh crores cleared in the month of August, and yesterday I think the DMIC has cleared 1.2 lakh crores of projects, 9 specific projects. So I think the government is cognizant of the fact that they need to revive the industrial cycle. So I think to play that, because this will take at least 2 or 3 quarters, because what's happening is that on the private sector, because of high leverage, because of banks' reluctance, sort of because of credit quality being poor, I think it will take time. And plus, we are heading to 5 crucial state polls a month or 2 from now, and national polls in 2014. So private capex will take some more cajoling, some more coaxing, sort of for revival, and hence. On the industrial side, one will have to stick to names which are extremely strong and where diverse revenue stream comes. Companies like Larsen and Toubro, or companies like Crompton Greaves, and a company on a mid-cap space, something like KSB Pumps. On the autos, I think our preference clearly would be the rural buoyancy that is expected to continue because of extremely strong monsoons, and hence the two-wheeler names like Hero Honda and Bajaj Auto